These experts have just been made aware of the reality of Tesla investing by Dan Ives, and his remarks are really enlightening. Is it because there isn't enough pent-up demand that Tesla has overproduced and can't lower costs enough? Or is the reason why demand has been so weak? And there's yet another issue with EVs. Why do those delivery data currently indicate such a high level of surplus inventory? How much time will it take for that to sink in? Actually, we believe it to be the fourth quarter. When I stand back and consider 1.8 million, which I estimate to be the amount of deliveries for the year, it's a very impressive figure considering the surroundings. Margin will likely decline, as Phil has already mentioned. I believe that the Cybertruck and a redesigned Model 3 will go into production in Q4. They might begin to increase in share in China. We have been advising our investors to keep owning this name because we believe that this is more of a pause into the next chapter of the Tesla growth story. How did they go from, a year ago, not being able to satisfy demand to the condition they are in right now? Yes, there is undoubtedly low demand. That has been demonstrated in China with the ongoing price battle. However, I think the decision to lower pricing was the right one. I believe it has increased demand for Tesla. Investors frequently engage in the prediction game to assess a company's future worth. They crunch all the figures and project sales, cash flows, and earnings over the following 5 to 10 years. However, that's not always the wisest course of action. It's crucial to start with the fundamentals when projecting the future of Tesla's stock. By this, we mean the company's demand in the rapidly expanding EV market, which it presently dominates and is poised to do so. Not every investor is aware of Tesla's secret sauce or the recipe for its success. Consider this. Early adopters, environmentalists, and enthusiasts all swarm to Tesla because it is a killer brand. This bundle also includes performance, range, and innovation, a combination that is difficult to pass up. In this video, we'll learn why, in contrast to most analysts, we believe there will be a good demand for Tesla. In a few years, Tesla will see demand so high that it will need to increase production to keep up with demand. Moving on, fresh data from China indicates that demand for Tesla's domestically produced electric vehicles has dropped by 10%, which has caused the company's shares to decline today. In fact, the stock is currently struggling to return to its flatline. The China Passenger Car Association revealed in a recent study that sales of the Model 3 and Model Y vehicles had decreased from the previous year. It follows a challenging week for the business, which also revealed lower production and delivery figures than the prior quarter. It's interesting to note that Elon Musk and Tesla are not afraid to aggressively reduce pricing. The game is volume, even at the expense of high profit margins. The fact that Tesla has adopted the current market structure is also intriguing. Put another way, it appeared to have returned after plunging more this morning, partially due to the China data. However, the Chinese EV manufacturers have been under a lot of strain lately, and I don't think their stock prices have recovered in the same way. As the day has gone on, I've been keeping an eye on companies like Xpeng and Li Auto, and they are, in fact, still struggling and haven't been able to secure a bid like Tesla has. Check out the figures. Tesla made an astounding $57.1 billion in income in the first 3 quarters of 2022, and the majority of this wealth came from the sale of their gorgeous cars. They delivered almost 900,000 units to happy consumers and unveiled close to 930,000 cars throughout that time. This demonstrates that, in contrast to what these analysts are claiming, demand for Tesla is actually increasing. Thus, you might have been throwing away diamonds in pursuit of stones if you've been selling your Tesla shares because you believe the market is declining. Welcome back to Tesla Tomorrow, everyone. In the EV market, Tesla is more than just a participant, it's a pioneer. The demand for electric vehicles, EVs, is rising rapidly at the moment due to global attention being focused on sustainability and the fight against carbon emissions. With its strong brand and substantial market share, Tesla is well positioned to benefit. The business has significantly advanced the infrastructure for charging electric vehicles, autonomous driving capabilities, and battery technology. These technological developments provide Tesla a market advantage and aid in setting its products apart from those of conventional automakers. But before we continue, please make sure to subscribe, like, and switch on post notifications if you enjoy this kind of content. This will help you stay updated on all that Tesla is up to. Consider this. Tesla manufactures electric cars that are renowned for their cutting-edge technology, extensive range, and sustainability, drawing in customers who care about the environment and tech fans alike. In order to keep current and prospective customers interested in what Tesla has to offer, the company also regularly upgrades and changes its cars with new features. It's interesting to note that these developments go beyond automobiles. Consider Tesla's innovative battery technology, driverless operation, and strong infrastructure for charging. Not only are these improvements excellent, but they're outstanding, offering Tesla a competitive advantage over other automakers. Additionally, Tesla has been entering new nations. Tesla stands to gain significantly from a developing market that looks for alternatives to conventional gasoline-powered cars, as more and more nations acknowledge and prioritize sustainability and transition to electric vehicles, EVs. Who wouldn't want a vehicle that excels over its competitors in terms of handling, safety, and acceleration? Additionally, Tesla has a vast network of superchargers that offer ease of use and alleviate range anxiety, thereby reassuring prospective customers regarding the practicality of electric vehicles for extended distance travel. What makes EV owners not want Teslas, then? With gigafactories located in Germany, China, and the US, Tesla is aggressively expanding. In order to keep up with the rapidly increasing demand, Tesla is stepping up its manufacturing, and as production rises, so does market share, which might result in revolutionary economies of scale. Indeed, it appears that UBS analysts believe Tesla has an advantage when it comes to obtaining essential parts, such as semiconductors and batteries. Rivals might encounter obstacles, but Tesla's internal battery manufacturing and control over raw materials might tip the odds in their favor. In order to grow, Tesla is increasing its capital expenditure in 2024 by investing in cutting-edge battery technologies and building gigafactories. The future appears to be very exciting. Energy storage problems are probably being addressed by Tesla's Powerwall and Powerpack, which are becoming popular in both the home and business markets. It's a wise diversification that applies to more than just autos. Tesla never rests on its laurels. Instead, it continuously improves and develops its manufacturing and engineering procedures to produce premium goods at prices that are competitive with the market. Amazing cars are the end product. There are undoubtedly additional factors to consider. Macroeconomic variables, such as interest rates, for instance, could influence the price of Tesla's shares. Increased borrowing costs resulting from higher rates could lead to a decline in demand for vehicles and a reduction in stock valuations. In addition, the rivalry is intensifying. Although Tesla has strong profit margins on its electric vehicles, rivals like BYD are closing the gap. However, investors in Tesla shouldn't be very concerned about this. To ensure that it keeps its market share, Tesla has lowered prices. Not only are these price reductions a tactic to preserve market dominance, but they also serve as a warning to competitors. Sales and profits at Tesla are rising at a remarkable rate as the company keeps expanding. In spite of weak demand across the board for the auto industry, the company increased its sales by 47% in the second quarter of this year, bringing its total to $4.9 billion. The net profits increased by 20% to $2.7 billion. It's reasonable to anticipate that Tesla's margins may fluctuate given the historically cyclical nature of the auto business, some aggressive price reductions on its vehicles, and investments in long-term growth projects beyond auto sales. Long-term, nonetheless, this will finally end out well. In the context of the larger automobile industry, the leader in EVs still enjoys substantial margins, notwithstanding some recent decreases. With recent price reductions, Tesla has been experimenting with its pricing strategy to increase its market share. Long-term benefits could result from this action. This is where Tesla's superpower shows itself. Elon Musk has previously stated that Tesla could use autopilot technology to sell its cars at a loss while still making a profit. In such case, no other automaker can match Tesla's performance, hence the company will have already won the race. Tesla will generate so much revenue that no competitor will be able to match it.